Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 14th of May in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, French President Emmanuel Macron tells us he's open to a major French bank being taken over by an EU rival to spur deeper integration.
The CEOs of Goldman Sachs and Bank of America sit down for exclusive conversations with Bloomberg.
And Anglo digs in. The miner rejects a second approach from BHP as questions grow over its alternative plan.
Let's start with a roundup of our top stories.
France's President Emmanuel Macron says he'd be open to the takeover of a major French bank by a rival in the European Union to deepen financial integration in the region. The comments come as Macron tries to persuade his EU partners to embrace what he sees as a transformative programme of reforms. Speaking exclusively to Bloomberg at the annual Choose France summit, the French president said the European Union needs a fresh approach to business.
Dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
This is a totally new world. And we do need this new business model for the Europeans. More innovation, more investment, single market and capital market union, and a relevant trade policy.
French President Emmanuel Macron there speaking to Bloomberg's editor-in-chief John Micklethwaite on the sidelines of the Choose France Investment Summit in Versailles. 15 billion euros of new foreign investment was announced on the first day of the event on Monday. 180 business leaders, including Goldman Sachs CEO David Solomon, is attending, who told Bloomberg that France is a very important hub for the company.
Britain is also hoping to attract more investment. The UK is sending a 450-person business and ministerial delegation to a joint summit in Saudi Arabia. It's the largest group the country has sent in more than a decade. Bloomberg's James Wilcock has more.
Saudi Arabia wants to diversify away from oil. The UK wants foreign investment. The result is a British trade success story. But there are questions about the relationship, with fresh allegations about Saudi's poor human rights record in the domestic press. Government figures say total trade has increased 40% since 2018 to £17 billion last year. But that same year has also shown there are limits to Britain's willingness to accept Middle Eastern money, with the state stepping in to block a UAE-funded bid to take over the Telegraph. In London, James Wilcock, Bloomberg Radio.
Anglo American has turned down BHP's second acquisition offer. The deal would have valued the copper giant at $43 billion. Bloomberg's Paul-Alain Hunt says the corporate action has led to some surprising revelations about Anglo's year-old turnaround plan.
Anglo shareholders have been largely left in the dark ever since that strategic review was launched. Overnight, the company said it would suddenly release the results of that strategic review. So they've really been scrambling to present shareholders with an option of growth.
Hunt adds that to fight off BHP, the miner will need to show its shareholders it can be more valuable on its own. Anglo's set to give a detailed update to investors later today.
The US Treasury Secretary Janet Yellen says that she hopes China won't retaliate to any coming trade restrictions. She declined, though, to confirm reports the White House will announce new tariffs on critical industries like EVs this week. Speaking exclusively to Bloomberg, Yellen says the Biden administration hopes to avoid wide-ranging restrictions.
President Biden believes that anything we do should be targeted to our concerns and not broad-based. And hopefully we will not see a significant Chinese response, but that's always a possibility.
Janet Yellen added that the US would protect its own emerging industry, saying China is really not playing by the rules. Any large tariff announcement is expected to become a talking point in November's US election.
Donald Trump's former lawyer Michael Cohen says the former president agreed to pay adult film actress Stormy Daniels hush money. Taking the witness stand during the trial's fourth week, Cohen recalled Trump asking him to pay Daniels $130,000 to buy her silence, disguised as legal fees. Bloomberg law anchor June Grasso says Cohen's testimony will form a crucial part of the case.
This is the part, this is about not the hush money payments, as we've said many times. It's about the way they were recorded and why they were made, because it's not illegal. It's not illegal to pay hush money. So we're at that part in his testimony, and this is important because he's the one who's going to have to be the link to why these payments were recorded as legal expenses, and did Trump know about them?
June Grasso speaking there at Bloomberg's Joe Matthew. The prosecution could conclude its case this week after telling the judge on Friday that they expected to call just 2 more witnesses.
Apple is preparing to sell its Vision Pro headset outside of the US for the first time. Overseas expansion for the mixed reality device is likely to include China, France and Germany to start with, although Apple hasn't yet disclosed exactly where the technology will be available. Bloomberg's chief technology correspondent Mark Gurman says the expansion will be an important test.
The headset, it got off to a running start in the US initially, the early adopters chiming in, the early adopters jumping in to buy it, but it really tapered out. Where you really want to sell the Vision Pro is in China, Japan, and Korea. Those markets love virtual reality. And so if the Vision Pro, this first model, is going to be a success, it has to be a hit with consumers in Asia.
Mark Gurman speaking there. The Vision Pro is Apple's biggest new product in years and kicked off what the CEO Tim Cook has called the era of spatial computing.
Melinda French Gates is stepping down as co-chair of the $75 billion foundation she helped create with her former husband. The philanthropist will receive a $12.5 billion payment to use for her own charitable purposes. French Gates said she leaves knowing the foundation is in strong shape. In a statement issued on Monday, Bill Gates will become sole chair, according to the organisation. In a moment, we'll bring you more of our exclusive interview with the French president and some of the business leaders attending his Choose France summit. But another story that caught our eye this morning, the return of the meme stock frenzy. Shares in GameStop, remember them, surged on speculation that one of the key architects of the mania back in 2021 was returning to social media. Keith Gill, also known as Roaring Kitty, posted firstly on X a picture of a man leaning forward with what looked like a gaming controller, which some traders interpreted to mean that he's coming back into action. There was a second post then with a short video clip saying, "Fine, I'll do it myself." Now this sparked a frenzy online and in the markets. GameStop shares, more than 175 million of them changed hands yesterday. The shares closed 75% higher. They were at one stage up as much as 120%. John Authers from Bloomberg Opinion has been writing about this morning as well, saying that the GameStop mania won't pack a punch like it did in 2021.
No, why, oh why is the big question. And it remains, doesn't it? Even though it's 2021, why this particular stock, created such a sort of flurry of interest. I think the other thing that you've got to say, though, is that anybody who was trading late in that GameStop mania moment really didn't make anything. They were sort of left holding the can, as it were. So I think that's difficult. On the other hand, those who are more kind of favourable to Roaring Kitty say, look, it's not like he went and made a social media name for himself afterwards. He just went silent for years.
I'm just really happy that we get to say Roaring Kitty so many times on the radio, which makes me happy this Tuesday morning. Let's bring you more of our exclusive interview now, though, with French President Emmanuel Macron. He's discussing the foundations of Europe, how they're changing, including issues like competitiveness, banking mergers and investment, with Bloomberg's editor-in-chief, John Micklethwaite.
If you take the last 3 decades, we created half of the value per capita created by the US. Why? Lack of innovation, lack of investment. This is the main reason. This is why now my top priority is to have a European policy saying we have to be much more innovative, we have to create a much more efficient capital market, we have to invest much more from a common budget as Europeans and from the private sector, and we have to deliver in parallel our decarbonation, because I do believe that climate, digital, growth and job creation are the 3 pillars of what we have to deliver.
And those, we will go through all of those, but just on that point about the European economy, you had a full-scale attack on it at the Sorbonne, where you said it is sclerotic, it is being left behind. Do you think that, from the EU's point of view, that sclerotic economy is a bigger long-term challenge than, say, Vladimir Putin?
I think this is clearly linked to what's happening as well, but we have to completely reset our model. I think now France clearly is one of the leading economy. We are number 1 in attractiveness. We've been number 1 during the past 5 years. And if you take job creation, growth, we are 1 or 2nd in the Eurozone.
Do you think you're being held,
so this is my point. So we are here. Now when I take Europe and especially the EU as a whole, but it's true as well for UK, we have this issue in terms of business model. Why? Because we had low-cost energy thanks to Russia, production thanks to Central and Eastern European countries with quite low costs, a market for exports, China, and a geopolitical umbrella, US. These pillars are being completely revised, totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reforms is to accelerate decarbonization and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and my view, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on the capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's and definitely the Eurozone's most successful bank, worth $80 billion. But you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several issues.
You would like to see BNP take over one of these, take over a German bank or an Italian one.
I want. We do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. Energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union, to have a single system of resolution, a single supervision, and a much more integrated capital market union.
Would you be happy with, say, Spain's Santander coming and buying Société Générale as part of that?
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union. It's already on track. Now we have to do it for capital market union, which is broader
more difficult.
and even more difficult, but we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement.
So that was France's President Emmanuel Macron speaking there to Bloomberg's editor-in-chief, John Micklethwaite.
Well, let's get more on this and bring in Bloomberg's Paris Bureau Chief Alan Katz. Good morning, Alan. Thanks for being with us. Emmanuel Macron, such an interesting, in-depth conversation. He was clear about what France wants and needs from the EU. How much support, though, elsewhere in Europe does he have for the sorts of ideas that he was talking about? For example, expanding the EU budget by €1 trillion.
Well, that's a good question. One of the things that people always accuse France of, and this is not actually even particular to Emmanuel Macron, is that they sort of put French interests in a broader view, and they claim this is what Europe needs, what Europe wants, when really it's what France needs and what France wants. In the case of this $1 trillion budget increase that he mentioned, it's just coincidentally or not coincidentally the same figure that a guy named Christian Noyer, who's the former head of the Bank of France, came out with in a report recently about how much money Europe needed to spend in order to meet the green transition and environmental challenges. And so in some ways, this still seems like a French perspective on things, and it's not really clear at all how much support he has for that at the EU level. And even when he started mentioning German support for things, he was talking about German support in terms of banking union and capital markets union, not necessarily for the $1 trillion budget increase that he discussed.
We heard part of the conversation there about the banking sector, but the French president was also asked about the prospect of the oil giant TotalEnergies moving its listing to the United States. What was the president's view on that?
So when John Micklethwait, our editor-in-chief, asked him about that, whether Macron would be happy about that, his response was not at all. Now, then he went on to claim that, this is just a rumor, though, and we'll see what really happens. It's not actually a rumor. What happened was that the CEO of Total told Bloomberg columnist Javier Blas that he was considering this, and he since then has told analysts that he hopes to have a decision on it or be able to present a decision one way or the other to the board by September. So this is far from just a rumor. But Macron did say, his response was not at all when asked about whether or not he'd be happy with the idea, which makes sense, of course, because Total is Europe's second biggest oil company. It's a major source of tax revenue in France. It provides, it guarantees both oil exploration, refining, and distribution via retail filling stations in France. So it would be a major hit for France were it to. Now, one thing to mention is that Total is not talking about moving its headquarters to New York. It's talking about moving its listing, which is not the same thing. But nevertheless, as he said, he would be unhappy with the idea.
OK, so issues around listings. Well, Macron was speaking at the Choose France Investment Summit. Bloomberg's Future of Finance Summit takes place in Paris today. So how do major business leaders view Emmanuel Macron's France right now?
In general, very well. Now, the future of finance is really aimed at financiers, and the Choose France conference that he had yesterday was aimed at non-French investors. And so I'm going to take those two separately for just a second. But in terms of the non-French investors, Choose France really actually has made a big difference. I was talking to the head of the American Chamber of Commerce not too long ago, and she mentioned that it really had helped to convince particularly American CEOs that France was a legitimate and real place to do business, because they'd come here for this conference, they'd hear the kinds of words that they want to hear from government in terms about trying to restrain regulation, trying to reduce taxes, trying to create a good environment for businesses to thrive. And it really changed their view on France. In terms of finance, France has also really benefited, less in part from that, but in large part also from Brexit. And one of the issues that we're going to explore later today, though, is that there was an initial surge of jobs coming over from the UK, from London to Paris, as a result of Brexit, and in particular as a result of the ECB requiring that banks put more and more risk takers and decision makers in continental Europe. And when the choice came between, say, Paris, Frankfurt, Amsterdam, and Dublin, Paris really came out ahead. But that increase in jobs has really plateaued at this point. Now, France has a second law that's going through Parliament right now in trying to sort of what they call it an attractivity law. It doesn't really work in English, but it's a law to try to improve the attractiveness of Paris as a financial center. They're trying to reduce some restrictions. And part of that law, or that draft law, has some ways that it might ease the ways in which banks can fire bankers or traders, which is a big issue for them here because they have these quite high-paid employees. And when, banking, as we all know, is a very cyclical business. And when things go down, they want to be able to get rid of some of these people. And it's quite difficult and quite time-consuming in France. And they're trying to make that easier. So one of the things we're going to explore actually on a panel just I have later this morning is whether or not that's enough to convince particularly foreign banks, whether they're American or other European or Asian, to put more people here in Paris or not, or whether we've sort of hit a cap at sort of how big Paris can become as sort of a regional financial center.
OK. Alan Katz, our Paris Bureau Chief, thank you very much for joining us.
Well, should we hear from some of those business leaders then who are at the Choose France Summit? Bloomberg has been speaking exclusively to some of the biggest names in finance who were there. We'll bring you thoughts from Brian Moynihan of Bank of America in just a moment. But first, David Solomon of Goldman Sachs. Now, he told Bloomberg's Jonathan Ferro that the UK's decision to leave the EU has helped to strengthen France's position.
Well, it's evolved a little bit, and Brexit had a big impact on that evolution. We have between 350 and 400 people in Paris now. That's that's triple what we would have had, 5-6 years ago. So there's been an evolution. I do think it's still a complex place for a professional services person to put an employee. In our dialogues, here we've talked about that. It's one of the things, I'm encouraged by. I think the administration is looking to do things here that actually improve, this is a business environment. And I think one of the things that is interesting is we've chosen France. It's a very, very important hub for us here on the continent. But I'd also say our people like living here. And one of the things in a competitive world for talent is we give our people much more latitude to work and operate out of places that they want to live. And it's certainly a very attractive place to live.
I wanted to ask you directly, have you chosen France because somewhere else is getting worse or because France and the continent is getting better?
Well, I think it's a combination. France on the continent has gotten better. The regulatory structure requires that we have more people here for certain functions that are important to our business. Our clients are here, and we want to be near our clients. And so, it's a combination of things that make this an appropriate place for Goldman Sachs to continue to grow.
I think a lot of us going forward through 2024 into 2025 feel like we're flying blind a little bit. Do you have more clarity, more visibility on the future of Europe or the future of the United States?
I don't have a lot of visibility on the future of the world, let alone Europe or the United States. I know there are a lot of people that you talk to that are very sure as to how things will play out as we go forward. I tend to look at things and think about risks. How do we manage risks? What are the tails that are out there that we need to be concerned about? When I think about economic outcomes, I think about distribution of those outcomes. And so, there's a perception of the direction of travel. We can certainly talk about that, but I certainly don't know what the direction of travel is. I will say, going back to what we were talking about here in France and just listening to, a number of officials that spoke at lunch today, they're talking about ways that they can accelerate more entrepreneurship, more investment, more flexibility, and also more strengthening and interdependency in Europe. Those things are hard to execute on, but I think they are very important.
The White House is doing something similar, but it comes at a cost. I think the budget deficit was 6% of GDP, north of 6% last year, at a time when unemployment is south of 4%. Speaking of risks, is that one?
It's certainly one that I'm very focused on. I think the level of debt in the United States, the level of spending is something that we need a sharper focus on and more dialogue around than what we've seen. We obviously had a pandemic. We made a bunch of decisions, in that pandemic, but we're long out of that pandemic, and the spending levels, are continuing at a pace that I think is raising our debt level and creating issues for us down the road.
So that was David Solomon, the CEO of Goldman Sachs, speaking to Bloomberg's Jonathan Ferro.
Now, the global economic picture was a key part of the conversation at that event in Versailles as well. And that's something the Bank of America CEO and Chairman Brian Moynihan has been discussing again with Jonathan Ferro. Brian Moynihan saying that despite the higher rates environment, the evidence suggests that US consumers are in good shape.
People are getting used to it. But the reality is that at some point the Fed has to bring the front end rate to get to a normalized curve, because an inverted curve forever doesn't sort of economically compute. But I think our team thinks that the terminal rate, the end rate that they'll get to will be more in the 3.5% range as opposed to 50 basis point range or 1% range. And we haven't really had that since before the financial crisis. There was a moment in 16, 17, 18 where they raised rates and they already started bringing them down to 19. So frankly, in our team, I say, if you're under 40, you've never seen this kind of rate environment. And this is normal. And so 3% front end, 3.5%, 4.5% 10-year, and people will get used to it because America did a lot of economic activity prior to 2007 for the 200-plus years of existence. So people have been used to it. It's just that we're in a very unusual time. And so the adjustments are taking place, and it's running through the economy.
We're hearing from some companies that maybe there are some cracks. We heard from Starbucks, McDonald's offering a similar view on the U.S. consumer. You've got some 69 million customers. What do you see? Do you see those cracks at all starting to emerge this year?
So if you think about it, where would the cracks emerge? You talked about the average account balances. They're still, especially for households 75, 100,000 and below, the account balances are higher than the pandemic by a lot. If you think about the spending settled into a more normal, where it was in 16, 17, 18, the Fed was raising rates, inflation, they're pushing, inflation was higher, they're pushing it down or holding it steady. So that's normal. And then on the credit side, we're just normal. normalizing to where we were in 19. So in 2019 was a 50-year low in credit costs in our company, and basically last quarter we were a little bit higher than that. And so we're normalizing, so it's increasing off a base. And people say, oh, your charge-offs are going up, but they're getting back to where they were in 19, and frankly, people thought that was very good credit, and it factually was. And so the question is where they go next. The good news is we're starting to see delinquencies flatten back out, i.e. they're not growing anymore. They normalize, and then they're staying. That's good news on the consumer side. So it's all okay. It's just higher rates are tough on people on the mortgage market. Mortgage originations are way down. Higher rates are tough on corporations using their lines a little bit less because, small, medium-sized companies, because it costs more. And if it costs more, you're going to be more judicious about it. So that kind of adjustment, what the Fed is doing with rate structure is having the impact they want. On the other hand, the economy's kind of there, and now we got to be careful we don't overshoot the other way. It's right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing. But that's been pushed out to when it occurs, and we got to be careful that we don't overshoot, because you see the consumer confidence numbers tipping down a little bit. That's what you got to be careful of. If the consumer leaves the game, it's hard to get them restarted.
So that was the Bank of America Chairman and CEO Brian Moynihan speaking exclusively to Bloomberg Surveillance host Jonathan Ferro, warning that there are risks out there if rates stay too high for too long. Speaking, of course, at the Choose France Summit, and interesting to take a moment perhaps to reflect on the thread of the conversation that goes through some of those interviews we've brought you this morning, and a really big pitch from Emmanuel Macron, yet again echoing what we heard in the Sorbonne speech last week too, around, I suppose, what his vision of the future of Europe is, remembering that he's, halfway through his second term as president. He's facing a very difficult European election campaign in France. The National Rally Party from the far right expected to come out on top, in fact, and his list certainly under pressure for his party as well. €1 trillion extra in the EU budget is a lot of extra money from every European member state. That is a big contribution that all of those countries would have to make, and it is a very French vision, as Alan Katz, our bureau chief in Paris, was telling us, of where the EU goes next. So the idea of being able to rally that support is a really big challenge, even at a leader's level. Yeah, absolutely. It's capitalism à la française, but can that message be sold? And particularly actually when the Franco-German relationship is not at its strongest. In fact, the personal relationship between those two leaders has often been reported as being pretty poor. Germany wary of pooling resources with across Europe, because that would mean, of course, pooling liabilities. So it's about whether that big vision for more investment, for greater defence spending, more dynamism and being able to hire and fire more easily, whether all of those issues translate across Europe, whether he can bring along European partners. Again, I mean, that's the central axis. We haven't even sort of spoken about the periphery countries in Europe and whether they buy into the French vision. But certainly Macron has had a number of opportunities to sort of make the big case for what the future of Europe should look like. Yeah, and at the moment he is one of the few people who is doing that. And it's worth remembering that he has made big changes to how the French economy is run, going right back to the time when he was an advisor to the former President François Hollande as well, who put in train a set of economic reforms that bore fruit only when he had become president several years later. So this is somebody who knows how to make changes at a national level, whether or not he can convince his counterparts at a European level to do the same thing. Europe tends to only make big changes in a crisis. Is the economic crisis facing Europe now big enough to warrant the size of change that Emmanuel Macron is looking for? We won't know until after the European elections next month. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond. Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts. You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker. And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.